to you and welcome to Finlight Financial Education's regulatory examination preparation. Well, the background to the RE, that is what this slide is all about. But if you have joined Finlight, then you are here to hear more about what it entitles and what it allows you to do and what not to do. A little background about the regulatory exams itself. As the word says, in order to regulate the financial services industry. So, looking back at a few years ago in 2001, 2002, there were many investors who lost their money due to investing their pension funds with unscrupulous brokers, and then the poor old people were left with nothing. And after having worked for 30 to 40 years, they were left with the bare minimum to live on, or even sometimes a government pension because the money they had worked for was then taken by brokers as such and invested in schemes. And I'm sure many of you have heard of these schemes, and not only as far back as 2001, 2002, but even in current day situations where you invest in schemes and then your money disappears. So what does regulatory exams mean? It means to regulate the role players that works for financial services institutions. In other words, people working with other people's money. Because clients are not often aware of the product they are being sold, and they don't always ask the nitty-gritty questions, and it has been found over time that many representatives have sold products to clients that they don't need. And when it comes to even things insurance, when it comes to claiming the insurance, it is not what they expected, or money didn't grow like the product promised or like the representative promised. So to avoid false advertising, those are the things that the reason why the FASE Act was brought into effect in the first place. The FASE Act of 2002 was brought in mainly to protect the consumers, because as was said, that the customers or the consumers or clients, whatever you want to refer to them as, they lost a lot of money. So suffering financial loss leaves people destitute. It leaves them with not being able to do what they wanted to do or what they set out to do. And hence the FASE Act was brought into effect to protect these consumers and to ensure that they are given sound financial advice. Advice can be given in format of only the product, and then intermediary services is when an actual consent is given by the client to sell the product to them, and a conclusion is then made that the service provider has now given the client the investment or the insurance or the medical aid, whatever product it is that a representative has sold to them. The FASE Act, the Financial Advisory and Intermediary Services Act as is known, was assented to in November 2002. So the date I don't give here is the 15th of November, because you are going to study. You are going to read through the entire manual. There is this video available, which is the background to RE. Finlight also offers the role players, who they are, what they require in order to act as such, as 6 chapters of the training manual, which is brought to you by the means of this video and presentation. But I have to reiterate, it's imperative that you do study, because without going through the entire training manual, you will not be able to pass the RE. There is no guarantee that Finlight can say you will pass after having read this, but the onus is upon each and every one of you to read through the book. And I will explain to you later on that the question paper is out of 50, and you can get 17 answers wrong and still pass, which means you can get 34 out of 50 and still get passed with a 66%. So I again say that the FASE Act was assented to in 2002, meaning it was put together and signed by the President on the 15th of November 2002. The FASE Act then came into effect on the 30th of September 2004. Now, knowing these two dates, you could answer various questions in the exams, because this factual knowledge that you have, 15 November 2002, and the effective date of 30th of September 2004, can then make you answer questions like a simple factual question: on what date did the FASE Act become effective? Or on what date was the FASE Act assented to or promulgated, as some of the gazettes refer to it as. Promulgated meaning put together and signed. So why was the FASE Act brought about? I've already mentioned that the most important reason or the objective of FASE is to ensure the protection of consumers. Secondly, to professionalize the financial services industry. So these are the two reasons why it was brought into effect, but mainly to protect the consumers, and you write the regulatory exams, and by means of this, they professionalize the financial services industry, meaning all the role players that work for the financial services providers. The Consumer Protection Act is not covered in this video, but the Consumer Protection Act was also brought about in order to protect the consumers mainly, so the consumers can read what their rights are. As representative, you read what the consumers' rights are, and also what you need to do to protect the consumers by giving them sound advice and rendering professional financial services to the client. The purpose of the RE, the purpose of this examinations is, as the word says, regulate all the role players within the financial services industry. It is to ensure that all role players understand what is required of them in terms of the FASE Act. Hence, you read the general exam, hence you write the examination pertaining to RE 5, which is for representative, and we will learn about the other RE exams later on. Secondly, to understand that compliance with FASE Act is everyone's responsibility. So it doesn't mean because an FSP employs or contracts a representative to work for them that the FSP will take responsibility for the completely. It is the duty of an FSP to take responsibility for their representatives and their KIs. However, to understand the compliance of the FASE Act is every role player's responsibility. Lastly, to understand the consequences and penalties of non-compliance. In other words, reasons why you will be debarred if you do not comply with the FASE Act, reasons for suspension and withdrawal of your licenses for the FSPs or the representative, what the duties of the compliance officers are and the key individuals. So basically, if a client suffers financial loss, or the company is put at risk, or the company risks a client's financial well-being, then there are consequences and penalties to be put in place if you are non-compliant with FASE. The examinations can be found for the various role players, namely the FSP, key individual, representative. And the categories which they can write the exams under are categories 1, 2, 2A, 3, and 4. Now, all these various categories are available in your training manuals, and the various category role players writes different examinations. And I'm only going to read out the category 1, column A. So an FSP, in other words, has to write the RE1, which is for key individuals. The key individual themselves also has to write the RE1, and the reason you have joined Finlight is to understand the regulatory examinations and prepare for you actually writing and then entering into a FASE role at whatever financial services institution you choose to. The representative then writes the RE5 exam, and this video deals with the background to the RE exam. The RE exam will test your knowledge, comprehension and application and analysis of the PHASE Act, the General Code of Conduct, board notices and FICA. So all of these are available in your training manuals and also discussed in various chapters after I do a video on the role players, who they are, what they need to do, what their honesty and integrity requirements, good standing, class of business training, qualifications, regulatory exams. And so for each of the role players, which is a video following this, a little bit is discussed as to what is required in terms of all of those role players. But the exam itself is based on these 4 elements. I repeat, the PHASE Act, the General Code of Conduct, FICA, and board notices. So what are the questions? What type of questions are available, or how do they set out the questions? They are all multiple choice. The multiple choice questions are based on knowledge, comprehension, application, and analysis. So a knowledge question tests your recall of factual knowledge. As I explained in the first slide, a factual question would be something like, when was the PHASE Act made effective? That's a factual answer. Comprehension tests the understanding and interpretation of factual knowledge and concepts. So what do you know about the facts? How do you understand it? Application, to test the ability to apply factual knowledge to real life situations. So in the exam, your question could be based on a scenario where a client bought a product in 2002, and by 2005, say, the client wasn't happy with their product, but because the product was sold to them in 2002, when the PHASE Act wasn't yet effective, the client wouldn't be as protected as they were post the 30th of September 2004. Analysis question. This type of question tests the ability to analyze factual knowledge presented in a situation and to decide on which best action to take. So, for instance, they could give a question on debarment. A representative has done X, Y, Z, and then based on the facts that you know, and then you need to make an analysis of how that question is put to you, and based on your knowledge comprehension, how do you apply and how do you analyze that question? So, the multiple choice questions are based on knowledge, comprehension, application, and analysis. So let's take a look at examples of these various types of questions. A level 1 complexity question, for example, would ask, within how many days must a financial service provider inform the registrar of debarment of its representative? Now, I've highlighted the answer, which is 15 days, and the other days, 14 days, 7 days, 30 days, are also mentioned in your book, but they pertain to other aspects of time spans when certain things needs to be done. What you should know when reading about the debarment of representatives is that the registrar must be informed within 15 days after being debarred to the registrar so that they are aware of the debarment of this representative. And let me give you an example. Say, for instance, representative works for insurance company A, and they don't give sound advice, they don't render good intermediary services, and they are not compliant with the PHASE Act, and so the insurance company A would have to debar them. So, reporting it to the registrar means that the registrar and all its departments, which is explained to you in the role players, is then aware that this representative with this ID number working for this company has done some unscrupulous work with regard to a client. So the registrar or the department would then be aware, and as soon as that representative leaves insurance company A, he maybe moves to another town, he or she, and apply with insurance company B. And when insurance company B, when they take on somebody new, they have to inform the registrar within 50 days of the new representative. But it is at this point that the registrar can then inform insurance company B that this representative has just been debarred from insurance company A. So that's the purpose of keeping a central register, or as it's called, a central rep register, in order to regulate where the representatives are at all times, and if they are compliant with phase. The second level complexity question is that of a comprehension. So when we talk about comprehension, it's how do you understand the factual knowledge which you have been given. In your training manuals, you read about key individuals. This question asks about the compliancing functions, and under key individuals and compliance functions, you would read that a sole proprietor or an FSP with one or more reps must appoint a compliance officer. So the question here reads, Jane Chetty is a sole proprietor and has no representatives. What are the requirements regarding the compliance function of the FSP? The options are Jane must appoint an external. B. Jane does not need to appoint a compliance officer. Jane must appoint an internal compliance officer. Or 4. Jane must be appointed as the compliance officer. Now, an example of this level, or as I say, complexity level 2 type question is comprehension. So, taking your factual knowledge, you need to now comprehend which of these answers are true. But as I stated, that a sole prop or an FSP with one or more reps must appoint a compliance officer. In this case, the question states that Jane Chetty is a sole prop and has no representatives. So, with no representatives, she doesn't need a compliance officer. If the question was stated differently and it said that Jane Chetty had one or more representatives, the answer would be that she must appoint a compliance officer. Now, the difference between internal and external compliance officers is that you would find that big corporate companies would normally appoint an internal compliance officer as a staff member because of the affordability to be able to pay the compliance officer, which is a highly skilled and highly sought after person. So, insurance companies and banks would normally appoint somebody internally that is on their payroll. But if Jane Chetty is a sole proprietor, meaning it's a small business, it's just a broker with one or two representatives, she can then appoint an external compliance officer, meaning that there are companies out there that forms compliance functions with the PHASE Act. So she would rather pay a fee, an annual fee to a compliancing company to come in at regular intervals or as is required for the small sole proprietor to come and check their compliance. So basically it would check her compliance as the sole property owner. It would also check then the representatives to see if they are also compliant. But again, I repeat, if it's a big company, they normally choose an internal person as a staff member in order to regulate and ensure that compliance is met with PHASE Act at all times. A level 3 complexity question. This tests your application of the knowledge which you know and as well the facts that you know and then how to comprehend them. An example of this question. Jean Hill is a representative of DCB Investments, must advise a client that is retiring on specific investments. Which of the following aspects is Jean not obliged to disclose about the recommended financial product unless inquired so by the client? Now I'm going to read out that before giving the answer, which is obviously highlighted. The risk of possible capital loss in future due to fluctuations in the financial markets. So that is something that must be disclosed, especially if a client is taking out an investment. Then the client would need to know how that particular investment has performed in the past 5 years. So normally the client is given a graph when they receive their policy schedule as to the performance of the investment, so that the client can know what more or less to expect in their 5-year term or 10-year term of the investment. But also it says due to fluctuations in the financial markets, remembering that promises can't be made to a client. Hence, you only give a pro rata. You give an imaginative figure of what the client can expect. Because something like COVID, something like a pandemic, something like a political upheaval can affect the economic status of a country, and therefore it would affect the outcome of the investment, and hence only possible figures or future figures can be given based on past experience or past growth of that particular product itself, based in that particular fund in which it was deposited. B. Information and graphs to illustrate the product's performance at intervals over a period of time. It's exactly what I just said, so that also must be given to the client. The answer D says any material illustrations about the product provided by the product supplier. So material illustrations about the product provided. So sometimes, an example, if you take out a Woolworths account, and they ask you to take out credit indemnity. Woolworths is not a financial services institution, but when you take out credit indemnity, they would take it out with an insurance company. So when you receive that policy schedule, then the material illustrations about the product provided by the product supplier, meaning all the details of the insurance company must be in there. In the event of your death, you needs to know, they can inform Woolworths. Woolworths would then approach the insurance company in order to claim the outstanding balance. Hence, they always ask if you'd like to take out credit indemnity. But then there's a product provided, which is insurance, and the product supplier would be an insurance company. The answer in this case, however, that Jean is not obliged to disclose is any income and other relevant tax issues of a material nature that need to be considered. Because if it's a big investment, a tax practitioner or an employee of a big company that is au fait with tax itself can then, the representative can then refer the client to the tax person in order to give a better understanding of what the tax implications of that investment may be. The last level of complexity question is that of analysis. So when we're talking about the analysis of a product, I beg your pardon, the analysis of a question, it is to analyze what you know, the facts, how you comprehend it, and how do you put together, how do you understand what is being asked of you. So based on all the material that you have read, they could ask a question as such. Consider the following events that occurred on the same day. Each of these events has, in terms of relevant legislation, varying periods of time during which the FSP must respond to the event or otherwise adhere to the legislation. Arrange the events in order of the shortest to the longest applicable period and select the correct option. Now, let us look at the first one. A question like this would give you these questions 1 to 6, and your actual answer must be circled A, B, or C at the bottom. So the complexity of this question, it says, the FSP uses a new postal address and must inform the registrar of the change. So knowing the fact that FSP must inform the registrar within 15 days of a change of their postal address, that is, if they move from one building to another. So your answer for that would be 15. The second one, the FSP received cash funds exceeding the cash threshold reporting requirement and must inform the Financial Intelligence Center. So this is within 48 hours, and the number there would be 48. But let me just explain the cash threshold reporting requirement, which is also in your training manual. There is a cutoff of 24,999 Rand. So in other words, anything exceeding that must be reported to FIC, the Financial Intelligence Center. And please, when you are writing the exams, please make sure a question like this could be on its own, where it says the FSP received cash funds, to whom must it be reported? And it could be to the FSP, to FICA, or to FIC, or to the FSB. But FICA is not an institution. FICA is actually the act. So when you report something, it must be reported to FIC, which is the Financial Intelligence Center. Just a small hint. Number 3, the registrar has requested that the FSP provide certain documents pertaining to a client's advice record. The registrar has requested that there are certain documents pertaining to a client's advice record. So I repeated that because I wanted to bring your attention to the example I showed you in question 1, where I said that 30 days or 7 days or 14 days are also mentioned elsewhere in the book. This is then that example that the FSP must provide documents within 7 of a client's advice record should the registrar request it. So our answers so far are then 15, 48 and 7. Number 4, a client terminated a financial product and the FSP is now required to maintain records of advice associated with the client's purchase of an additional period. The client terminated the product and the FSP is required to maintain records. This answer is 5, and in your training manuals, when you read about record keeping, you'll read a whole lot of a list of requirements to be kept from date of sale of a product or date of cancellation or termination of a product. And the record must be maintained for a minimum period of 5 years. Number 5, the FSP received client funds and must pay it into the client's designated, account for designated client funds. So the funds are received, in other words, the client pays. Remembering at this point, yes, most funds take place by means of a debit order, a stock order, or an EFT, but we must not forget that there are still people living in rural areas whereby smaller insurance companies actually go and collect cash, and a receipt is given for the cash received. So an FSP received client funds, and it must be paid into the designated funds account within 1 business day. First meeting, the FSP provided a client with the details of a product supplier and must now provide the details to the client in writing. So when you take out a policy, whether it's via a call center or a representative comes to see you at home, or you decide to go into a company yourself, you must receive the policy schedule within 30 days. Let us look at the question again. The last sentence reads, arrange the events in order of the shortest to the longest applicable period and select the correct option. Now, if you remember, 5 was the shortest period, being 1 business day. If you look at your answers, being A, B, C, or D, the shortest one was number 5, 1. So it's easy to spot that B is the correct answer in this case. So, based again on your factual knowledge, your comprehension, and how you analyze the question, and most importantly, the facts that you know from the book, you are able to answer a question like this quite easily. So, Again, I say it's important that you read the questions. Again, look at words like must or may, and like the previous question stated, where Jean Hill was not obliged to tell a client, because it's words like that that could actually make you then not answer a question correctly. All right then, let us take a look at the layout of the examinations for the RE. There are a total number of 50 multiple choice questions. The duration is 2 hours. You can select an answer from 4 possible options. There is only one correct answer, as I did mention. You can only circle A, B, C, or D. There is no negative marking, meaning there are no 2 answers, because some of them may look the same, and then it's that difference between the words must or may or should not that, so the whole question could look right to you, but it is just that one word that makes only one answer correct. Random selection of questions apply, meaning that 20 of you could be sitting in an examination room and there would be 20 different question papers. There's a reason why you have to apply to write the exams within 2 weeks or 2 weeks prior to the exams, is that the examining body would then send X amount of question papers. There is a bank of questions, over 6,000 questions, and every person will get a different question paper, hence random selection of questions apply. So no copying, it won't help you at all. Same question bank is used by all 4 examination bodies, meaning there are 4 bodies which can, through whom you can write the examinations. And the pass mark is 66, as I explained earlier. If your child comes home with 17 wrong or 34 out of 50, you normally give them some troubles about studying more. So I could say the same to you, please do study. It is in line with international best practice, meaning that you could go overseas, and if you've written the regulatory exams of your particular country, and you go and work for a financial institution in another country, then you have a general knowledge of compliance with the FASE Act. An unlimited number of attempts, but I am sure that you do not have the money to write many times, but through the help of financial education, I am sure that you will pass first time, because you will study and you will revisit the videos in order to understand, go through some multiple choice 2 weeks prior to writing to study them in chapters or in sections of the book that you don't understand very well. So just a little hint is to always read the question when you are doing the exams. Look at the options for answers. In this way, you will ensure that you are aware of what they are asking for the examination question itself. And the 66% pass mark is just that 65 you fail. It has to be 34 out of 50 in order for you to pass. And the only way you can do this is by reading through your training manual, and again, I repeat, to do the videos in conjunction so that you do not have an unlimited number of attempts to write the exam. The deadlines for RE. So you might ask, if all these dates are passed already, why does it have anything to do with you? Well, it says here that representatives appointed between 2004 and 2009 must complete the RE Level 1, which is this June 2012, and a rewrite was done by the 30th of September 2012. Those were for RE1 and RE5 exams. The RE Level 2 exams, that was the product-specific exams, was to be done by the 31st of December 2013, And then a level 1 was granted to the 31st of March 2013. Now, again, what has this got to do with you? Because some exam questions could be based on these representatives in a scenario question asking you that if a representative was appointed before the 31st of December 2009, and you will see 2004, the time when the FACE Act became effective, that means that those representatives had a deadline by which they had to write the examinations. They had until the 30th of June, and they were to rewrite by the 30th of September. But of course, because it was new in 2010, I was one of the first trainers to train RE in 2010, and because it was so difficult for people to understand, it was something new, an extension was granted to March 2013. So in the exam questions, any representatives that worked before 2009 had deadlines for the RE. However, if you are new to the financial services industry and you are either working in the capacity of a FACE officer, but you have not yet reached your RE deadline, it is because of the following reasons. The RE level 1 has to be written within 2 years of appointment while working under supervision, and that is since January 2010. So, again, the previous slide said anyone from 2009 earlier had deadlines by which to write, but anyone appointed in a FACE role after 2010 had within 2 years of appointment in their role as a FACE person to write while under supervision. Some of you may be working under supervision at the moment, and the reason is because you do not have your RE as yet, which I'm sure you know, and it's why you have come to Finlight. And the RE level 2 exams within a period of 6 years while working under supervision. So basically ending off by saying that if you are new, you have 2 years from your date of appointment. It's called DOFA, date of first appointment, to write your RE exams, and 6 years to write your level 2 exams. Once you have completed that, you will no longer work under supervision. So I trust that this all makes sense to you now, and that you were able to answer the questions based on anything about reps being appointed on certain dates and times, remembering the 2009 and before that, and then those after. I have come to the end of the slideshow, and I trust that the background to RE has assisted as expected in the examinations, and that you will revisit the videos from time to time and accompany the training manual with it, go through the questions and highlight the words like must, may not, should not, and when you do the exams especially, you are only allowed to write with an HB pencil, which they will give to you at the examinations. And when you erase the questions, make sure that you erase them properly, because they put sort of a stencil to look at the questions or to mark the questions actually. And if they pick up 2 answers, you get the whole question wrong. So just a little tip when writing the exam. So this video is preceded by the one called Role Players, where, as I explained, are who's who under the umbrella of the financial services industry, what their functions are, and what is required of them. There are also 6 chapters following these introductory videos. And again, I repeat, please study. Thank you for using Finlight Financial Education's training forum, and I trust that we could be of assistance to you. Thank you and good luck.